first question I asked was, are you taking advantage of every tax deduction and every tax credit that's available to you? So my question here is, basically I'm going to outline what the difference between a tax deduction, what the difference between a tax credit really is. So a tax deduction is a dollar for dollar reduction in the amount of tax, in the amount of income that you're going to pay taxes on. As an example, if you had a $5,000 tax deduction and your income was $50,000, that $5,000 deduction will reduce your income to $45,000. If you're in a 50% tax bracket, which most of you are, that $5,000 tax deduction just saved you $2,500 in taxes. Does that make sense? A tax credit, on the other hand, is a dollar for dollar reduction in the amount of tax that you are going to pay. So a tax credit, if you have $50,000 of income, the tax credit is worth $5,000 because a credit reduces your tax, a deduction reduces your income. So when you're speaking with your accountant, your financial advisor, and they're talking to you, it's important that you know the difference between a tax deduction and a tax credit. If your accountant or your financial advisor brings up a tax credit you may qualify for, you probably want to pay a little bit more closer attention than if they're talking about a tax deduction. So now that we all know that taxes is the number one expense that we will have throughout our lifetimes, what better way is there to accumulating wealth throughout your lifetime than reducing life's biggest expense? In our opinion, there really is no better way. So you want to make sure that throughout every day and throughout every year, you're working with your advisors and implementing tax saving strategies wherever possible. Now, has anyone ever heard of Al Capone? Yes? Gangster, mobster, killed tons of people, organized crime, leader of an organized crime organization. Does anyone know what he went to jail for? Exactly. So Al Capone went to jail for tax evasion. Everything we're going to talk about today is not tax evasion because we don't want anyone going to jail. What we're going to be talking about today is tax avoidance, which through tax planning, which is of course 100% legal, right? So to summarize, the following are the tax smart strategies for wealth accumulation. So you want to make sure you're maximizing your tax deductions. You want to make sure you're taking advantage of every single tax credit that you may be entitled to. If possible, you should consider shifting income and tax deductions into years when you're in a lower tax bracket. So, for example, you sold your dental practice this past year. The following year, you may be in a very low income tax bracket. You want to shift income into those low income years, and you want to shift deductions into higher income years. This way, you're maximizing your tax savings on those dollars. So you don't want to look at tax planning as a once a year, one-time thing. You want to look at it from a multi-year, multi-stage planning process. If possible, you should try to shift income among family members to take advantage of lower tax brackets of maybe children or older parents. You should defer the payment of taxes to future years through the use of tax-deferred accounts. You want to maximize your sources of tax-free income. And if you do not own your own dental practice, you should meet with your HR department every year and making sure you're taking advantage of every single tax-free fringe benefit that your employer offers. And lastly, you should speak with your tax and financial advisor not just once a year on April 15th to prepare your tax return. April 15th is the last day you have to prepare your return. But at that point, when you're speaking with your advisor, there's nothing they can do for you to help save you money in taxes. You should be meeting with your advisor bare minimum twice a year, once over the summer, once right before the end of the year, and then again during tax time. But realistically, you should be meeting with them at least 4 times a year. All right, so the following is an action plan for understanding taxes. So you want to make sure you read through Chapter 2 of this book, as well as Appendix C, which goes even further into detail about saving taxes. Begin to take control of your own taxes. You shouldn't feel that I have no control. The government sets the tax rates. I just pay whatever taxes my accountant says are due. You want to make sure you're in charge and you're the one figuring out ways to reduce that bill. You want to make sure you're working with a professional tax preparer that understands dentists and dentistry. You want to consult with your tax advisor throughout the year, not just during tax time. And you want to familiarize yourself with tax savings and tax smart strategies. You want to make tax planning a part of your everyday life. So what I tell clients all the time, especially ones that own their own practice, anytime you buy anything, you want to think to yourself, is there any way I could justify this being a tax-deductible business expense? And by keeping that thinking, there's a much greater chance that you'll take advantage of a lot more tax deductions and a lot more tax credits than you otherwise would have. All right. And then you want to also read the remainder of the chapters of the Generational Wealth Code based upon your answers to the wealth management questionnaire. At the end of every single chapter within the book, we give you guys tax smart strategies that you can implement throughout the whole personal financial planning process. So you want to make sure you're going over that as well. You should encourage your family to do the exact same thing. You should at least read a summary of the changes made under the One Big Beautiful Bill Act, which was, again, passed this past July 4th. If you're not familiar with at least the basics of the tax code, it's very hard to go back and ask your accountants the right questions. So you want to at least have a basic understanding there. And you want to use the Tax Smart Roadmap to Financial Independence to transform the tax code into part of your generational wealth code.